What's up, people? Welcome back to Invest with T-Claus. My name is Tevi, and this channel is dedicated to my investment journey, along with coverage on crypto, Tesla, Neo, Virgin Galactic, and ChargePoint. Come for the information, stay for the random clips. So let's start today with a couple of shout outs to the viewers of the channel. The first one goes out to Lloyd for opening his Robinhood and Coinbase account, giving us both a free stock and $10 worth of Bitcoin. And the other goes out to Dane for signing up with Coinbase and giving us both $10 worth of Bitcoin. If you've been on the fence and are ready to make the leap into crypto and or stock investing, my referral links are going to be in the description below. The big micro news this week, which had the markets on edge, was centered around the address by Fed Chairman Jay Powell on Friday, and the main concern here being how the discussion would be framed around tapering versus rate hikes. On a separate note, there was also some really interesting news pertaining to the cryptoverse. So in today's video, I'll spend a bit of time on the macro environment, touch on what Jay Powell covered and how this will likely impact markets moving forward, then get into some crypto news that suggests adoption and integration is accelerating, and wrap up with a weekly performance review expressed in percentage gain or loss. Reminder that the ChargePoint Q2 earning call is next week, Wednesday, September 1st. I'll cover my takeaways and thought in the next video. Go ahead and drop me an early like and hit that subscribe button. It really does help the channel and the content get more traction. Thank you, and let's get into it. One of the most heavily debated topics in the financial news is the quantitative easing the Fed put in place in response to the pandemic. For reference, quantitative easing, or QE, is a monetary policy in which the central bank purchases longer-term securities, like bonds or mortgage-backed securities, from the open market in order to increase the money supply and encourage lending and investments. Buying these securities adds new money to the economy and also serves to lower interest rates. Well, this policy was put in place last year when the pandemic brought the economy to almost a screeching halt. QE was implemented to stimulate the economy and help support it until it was strong enough to stand on its own, right? It was thanks to that approach that we've experienced the fastest recovery in the market recorded history. The drawbacks, however, is that 1, it adds to the national debt, 2, the extra liquidity and ease of borrowing makes it easier to create asset bubbles, think the AMC and GameStop saga, and 3, it can lead to prolonged and sustained inflation. As much as the market cheered this approach in 2020, 2021 has been more polarized, with many calling for the Fed to start the tapering process. Again, for reference, tapering refers to the Fed gradually reducing the pace of asset purchases and ultimately phasing it out. The reason we've consistently seen markets sell off each time inflation numbers came in hot is because one way to combat inflation with monetary policy is to raise interest rates. And up until Friday, the fear was that tapering and tightening would go hand in hand. So to summarize Jay Powell's address, the economy has recovered and is stronger than it was pre-pandemic. The tapering process will therefore start later this year. We're still waiting on a specific date, but interest rate will remain low until further substantial progress has been made in regards to unemployment. I'll link the full address in the description below. It's about 20 minutes long, but it's certainly worth a listen. That formal announcement of the decoupling of the tapering and tightening is exactly what market participants were hoping for. And it's the reason why we saw the NASDAQ and the S&P 500 rally to new all-time high post Powell's address. What you need to realize is that despite the fact that it's pretty cut and dry as far as the path forward, a good portion of market participants don't like uncertainty, and the finance media literally makes a living by injecting fear, uncertainty, and doubt into the market with polarizing and dramatic headlines. All right, so the next few months will therefore be focused on the speed/duration of the tapering process. When will the first rate hike hit? And what risk could a misstep by the Fed bring? That will inevitably bring some volatility. So let me play you this quick clip here, and then we'll come back.
The S&P's gone 200 days without a 5% pullback. We've done 48 closing highs on the S&P 500 this year. That's a remarkable stat in and of itself. The question is the game about to change? Do we need to pay more attention to China's economic slowdown? Should we be more worried about the Delta variant than the market obviously appears that it's not?
Well, I always like to try not to, first of all, overthink things and take from the market what it gives us. And I think as it relates to, we've had, I think, exactly 191 days without a 5% correction, which, by the way, is double the average. A correction is due just because mathematically, the longer it goes, the higher probability you get one. But I'm much more in Jim's camp because what are the alternatives, right? In the public markets, if you step to the side of equities, whether that's value or growth, you're going to languish in zero yielding fixed income assets and then do what? And I do want to remind the viewers that, when we do get a sell-off, which we will, don't forget there's two decisions you have to make. Selling is very easy. It always feels good to sell, take some chips off the table, but remember, you have another decision to make, when to get back in. And the weight of history tells us all that those people that sell get back in much higher than when they sold originally. And so I still think buckle up, but I don't think the Fed's going to do anything surprising. I think they're going to manage our expectations like they've done. And I think you stay invested and really embrace the volatility, right? Embrace that volatility. That's really your only choice, I think, as a long-term or even shorter-term investor.
Great perspective and a point of view I've certainly shared with you all over the past few months. Again, short of a black swan event, there isn't a single person out there who believes that the current market trajectory is an up and to the right of the chart. I'm not a financial advisor, but she certainly is. So stay invested, pick quality names, and use this volatility to your advantage to buy at a discount. All right, let's set equities aside and now talk crypto. We went from what felt like extreme exuberance at the start of the year, followed by extreme fear after the crypto market corrected by over 50% in most coins. But despite these crazy swings, many, including myself, are still extremely bullish on the crypto space and are calling for price targets that frankly seem hard to believe, right? So think 100,000 for Bitcoin, $10,000 for Ethereum, $10 for Cardano, and $1 for Doge. The fact of the matter is, the adoption rate of cryptocurrency and blockchain technology keeps accelerating. The use cases are being expanded and sentiment around its usefulness has clearly shifted. Recently, Deloitte, one of the big four accounting firms, surveyed more than 1,000 finance professionals based in Brazil, China, Hong Kong, Japan, Singapore, South Africa, the UAE, United Kingdom, and the US. And it was conducted between March 24th and April 10th. So that's when crypto was bubbling up and doing extremely well. What they found is that 81% of respondents agreed that the technology is broadly scalable and has achieved mainstream adoption. 73% of those respondents thought that their business should adopt blockchain and digital assets, and failure to adopt the technology would result in losing a competitive advantage. A recent poll ran by CNBC just a couple of weeks back, and that one included 5,000 participants in the US, found that crypto adoption is on the rise. And they had 11%, to be precise, of participants were investing in cryptocurrency, and 60% of US crypto investors cited the potential for long-term growth as being part of their reason for investing, and 44% were looking for potential high growth in a short period of time. Another piece of news that surprised me this week is that the Air Force is adopting crypto technology. And I quote, "In the last few years, blockchain technology has become very attractive to enterprise organizations with its promise to deliver more efficiency and security for numerous use cases, including supply chain management. This contract opens the door for bigger, more critical uses of blockchain for data protection in a global digital infrastructure, bringing forth the true promise of the core technology." So that's increased adoption by the public. The military is getting into it. We also have Microsoft, who is integrating with the Ethereum network. So this is another piece of news that I saw earlier this week. So Microsoft new system, Argus, is based on the transparency element of blockchain technology. For reference, Argus is a trustless incentive system built on the Ethereum blockchain that attempts to secure data acquired from the open anonymous population of piracy reports. So take a step back and think about this, right? So the benefits cited by Microsoft and the Air Force are data security, integrity, and transparency. Now ask yourself, would those qualities be highly sought after for something like, I don't know, elections and vote counting? That's just an example. And where else could the technology be integrated? Really, the options are plentiful. A couple more big ones to mention. On Thursday, the Cuban government announced that they too would recognize Bitcoin as a legal tender and regulate cryptocurrency in general. This would make them the second country after El Salvador to adopt Bitcoin as legal tender. And why are they doing this? Well, Cuba called out socioeconomic interest. The reason being that tough embargo rules on Cuba have made it difficult to use the dollar, and as a result, the popularity of Bitcoin has grown among Cuba's technology-savvy residents. Citigroup, another major bank, will start offering Bitcoin futures trading, and the reason, the bank is said to be fielding a surge in client demand for crypto exposure as Bitcoin has now returned and is hovering around the 50K level. Now, this is just barely scratching the surface of the level of interest and participation the crypto space is actually seeing. Let me play you one more clip here.
This is not a fad. There are elements of this certainly that feel a little speculative and bubbly. And I think those bubbles are highly localized and very common in new technology sectors and new investment sectors. But if we zoom out and we look at the secular 10-year trend here, the 20-year trend, the reality is that as our lives become increasingly digital, as we become increasingly global, interconnected, and markets become more connected and operate 24/7, 365, we're going to continue to see more and more assets evolve and pivot to be a part of this world. And eventually our view at CoinShares on the trading side is people will trade all sorts of assets across all sorts of different asset classes, across different metaverses. And that trend, again, is only accelerating. It's not just in crypto. We look at Q2 earnings. Every software company is talking about metaverses. This trend is here to stay. And again, we view crypto as a fundamental enabling component of this new digital world that we're seeing emerge.
The bottom line is this: those paying attention are investing into the space because they're realizing that we're past the inflection point and the transition is literally right now. I link a couple of articles. I highly recommend that you go and read them for more perspective. All right, so let's switch over and talk weekly portfolio performance expressed in percentage gain or loss. And this was certainly a choppy week with markets playing the balancing game, but ultimately falling as expected prior to every Fed address, right? This is pretty typical. But as always, we recovered, and I did manage a gain of 1.25% for the week. Not too bad, all things considered. And with that, this will do it for today's video. Hopefully you found the content insightful. If so, please drop the video a like if you haven't already, and share with others as it greatly helps the channel grow. For my newcomers, remember to hit the subscribe button and ring the notification bell so that you don't miss out on any future content. As a reminder, I post every Sunday and occasionally during the week. Thank you for watching, stay humble, hustle hard, and I'll see you in the next one.